Stop me if you've heard this before. It'll take 6 to 8 months for interest rate hikes to impact the real estate market because real estate is a lagging indicator. Well, it sure seems that interest rate hikes this time around impacted the real estate market a whole lot quicker than that. Let's chat about that on this, the November Canadian Real Estate Market Update. Hey there, welcome back to another monthly Canadian Real Estate Market Update here on Bald Prairie Real Estate. My name's Matthew, real estate agent in Regina, Saskatchewan. That's my trusted assistant, Matilda. I want you to finish this sentence for me before we start this video. The Canadian real estate market right now is, and you get 3 choices, crashing, rebounding, or stabilizing. And if you're living dangerous, let me know in the comments below what your answer was and even why. Now, like I said, I've got this hunch that the Canadian real estate market reacted a whole lot quicker to rising interest rates than this idea that it takes many, many months before we see the impact. And I'll talk about that in the wrap up after we've gone through all the different numbers in all the different cities. But of course, let's start off with another terrible joke. How do you tell the difference between an alligator and a crocodile? One will see you later and the other in a while. Do you have a terrible joke that I can use in future episodes of Bald Prairie Real Estate? Put it in the comments below. Help me out. Like this video if you love learning about real estate. Subscribe if you haven't already. And leave comments. I love chatting with you guys there. In Victoria, 480 homes were sold in the month. That's down 33% from their 5-year average of 723 homes that are typically sold in the month. There was also 1,000 homes listed for sale in the month. That's up 3% from the 5-year average of about 975 that would typically be put up for sale. And their active inventory is 2,300, up 8% from the 5-year average of a little over 2,000 homes for sale, meaning months of inventory in Victoria is 4.6, right smack in the middle of a balanced market. Not surprisingly, the composite benchmark price in Victoria is down, now about $920,000. It's up 12% from last year, but down about 8% from the peaks we saw a few months ago. That 480 homes sold last month in Victoria is not only more than last month, but also the month before that. Typically, they should be lower, but we saw a little bit of an uptick. And Victoria real estate agents are telling me that, yes, they are seeing that activity, especially in the more affordable segments of the market, and they're starting to see some bidding wars. So kind of a little bit of a burst of activity. We'll have to see if this is just kind of a 1-month thing or if this is a more sustained trend. But the market pace in Victoria is still slower than normal. In Vancouver, 1,900 homes were sold last month. That is down 37% from the 5-year average, where typically 3,000 homes would be sold. The 4,000 homes that were listed for sale, well, that is down 13% from the 5-year average. Typically 4,600 homes will be put up for sale in the month. And there are about 9,800 homes for sale in Vancouver. That is down 3% from the 5-year average of about 10,200, meaning months of inventory in Vancouver is 5.2, right in the middle to leaning towards a buyer's market, but we're still very much in a balanced market across the GVA. Benchmark price in Vancouver is about $1.15 million. That is up 2% from last year, but it is down 10% from the peaks we saw in the spring. There's 3 trends I'm watching right now in Vancouver closely. The first one here is month-to-month sales. Now, we saw sales increase from September to October about 12%. It's not uncommon to see sales increase, but usually it's only about 8 or 10%. The next one is new listings. Normally, you're going to see new listings are up about 15% from September to October. This year, they were only up 5%. And the last is price trends. Of course, that's an important one everybody's watching. We're still seeing prices decline, but we're seeing the pace of price declines slow down in Vancouver. And this last little piece of information I stole straight from 𝗬𝗄𝗃𝗍, so thank you to him for that. There were about the same number of homes sold last month in Vancouver as we saw in 2008, but the inventory right now is half of what it was in 2008. And not surprisingly, the market pace in Vancouver continues to be slower than normal. The 1,850 homes sold in Calgary last month is almost as many houses that were sold in Vancouver. That is actually staggering. That's up 12% over the 5-year average. Typically, about 1,650 homes would sell in the month, and there are about 2,200 homes that were put up for sale in the month. That's down 11% from the 5-year average. Only about 2,400 homes would be put up for sale this month. So active inventory, about 3,900 in Calgary. That is down 30% from the 5-year average. Typically about 5,500 homes would be up for sale this time of year. Months of inventory, 1.8. That is the tightest months of inventory across Canada. So the benchmark price in Calgary, $523,000. That's up 13% year over year. it is down 4% from the peak we saw in the spring. With only 2 months left to go, Calgary is on pace to easily surpass the most number of homes sold in a single year. Kind of a crazy thing going on there in Calgary right now, and it continues to be the tale of two stories: price and what people are buying. Above $500,000, especially in the single family home market, that is a lot softer than the sub $500,000 market, and especially for condos and townhouses. So depending what you're looking for, if you're looking for more expensive single family homes, probably gonna find it more of a balance to a buyer's market. Whereas if you're looking for a more affordable condo or townhouse, it's gonna be much more of a seller's market in Calgary right now. And not surprising, in Calgary, the market pace is busier than normal. In Edmonton, they had almost 1,500 homes sold, but that is still down 2% from their 5-year average of 1,500 homes sold in a month. There's also 2,600 homes put up for sale. That's up 4% from their 5-year average of about 2,500 homes that would typically be put up for sale in a month. And so active inventory homes for sale, 7,100 right now in Edmonton, up 5% from their 5-year average, usually about 60. And our homes are typically for sale this time of year. That means months of inventory is at 4.9, so balanced market trending towards buyer's market. And the composite benchmark price at $380,000 is essentially equal to last year, down about 8% from the peaks we saw earlier in the year. It seems like in Edmonton, they kind of just did the copy paste from the month before with both sales, days on market, everything like that. Kind of just like it was the month before. The notable exceptions are, of course, inventory and new listings, but those kind of shifted with what we'd expect this time of year. So the market pace Edmonton is about normal. In Regina, 256 homes were sold in the month. That is up 7% from the 5-year average of about 240 homes sold in the month. There are also 371 homes listed for sale in the month. That's down 11% from the 5-year average, typically about 420 homes to be put up for sale. And currently there's under 1,000 homes for sale in Regina. That is down 24% from the 5-year average. Typically we're closer to about 1,300 homes for sale right now. Months of inventory though is at 3.9, so basically kind of straight smack in the middle of a balanced market. And the benchmark price is $318,000. That's essentially equal to what we saw last year at this time and down a couple of percent from earlier this year. While sales continue to be above the 5-year average in Regina, they also continue to trend back towards that 5-year average. The new listings being down, that's an interesting one because only January and October now have seen the number of new homes listed this year versus the 5-year average be below that 5-year average. And overall, we continue to see a more balanced market in Regina, but we're still seeing bidding wars. I just lost out on one a couple of weeks ago, so it's still happening. And the market pace in Regina is basically normal to slightly busy. In Saskatoon, 319 homes sold in the month. That's down 8% from the 5-year average, typically about 350 homes to be sold in a month. The 510 homes that were put up for sale in a month, well, that is down 15% versus the 5-year average, typically around 600 homes will be put up for sale in a month. And the 1,100 homes for sale right now in Saskatoon, well, that's down 26% from their 5-year average, typically about 1,500 homes will be for sale this time of year in Saskatoon. Months of inventory though is at 3.4, basically right on that edge between a seller's and a balanced market. And the benchmark price in Saskatoon is up about 4% year over year at about $371,000, down a couple of percent from the peaks we saw a few months ago. In Saskatoon, they had a really interesting first this month, and that was, if you look back week by week, there was a single week last month where they didn't have a single house sell for more than asking price. That's actually the first time that's happened all year long. So really interesting little tidbit. Much like Regina, seasonal slowdown going on in Saskatoon, trending back to normal trends that we typically see this time of year. Now, there's overall kind of a general balance in the market, but there's definitely pockets that are hotter or cooler than others. So depending what type of home you're looking for, you may see a seller's market or you may see a buyer's market in Saskatoon. So that market pace is about normal in Saskatoon. In Winnipeg, a little over 1,000 homes were sold in the month. That is down 30% from last year. They had 1,730 homes put up for sale in the month, up 3% from last year. And the nearly 3,700 homes for sale right now, that is actually up 30% year over year as well. Months of inventory in Winnipeg is at 3.5. And the benchmark price is $330,000. Equal to last year, down about 10% from what we saw earlier in the spring. Talking with agents at Winnipeg, they're telling me that a lot of their buyers are kind of in a wait and see mood, and this is what we're seeing across the country. Buyers are waiting to see what happens with interest rates and what happens with house prices. A lot of them saying, I'm gonna put things off until the spring and see if it's a better market. We'll have to wait and see till the spring if that's a strategy that proves out to be successful and there's really good deals to be had, or if we're potentially set up for a busier spring than we expect. But the market pace in Winnipeg is is slower than it normally is this time of year. There was under 5,000 homes sold last month in Toronto. That is down 43% from the 5-year average. Typically about 8,700 homes would sell in the month. They also had about 10,400 homes put up for sale in the month, but that is down 28% from the 5-year average. Typically about 14,400 homes would be put up for sale in the month. So that leaves active inventory at 13,000 in Toronto, down 17% from the 5-year average. Typically about 15,600 homes would be for sale this time of year. That leaves months of inventory at 2.6. So numerically, Toronto is actually still a seller's market. I know it doesn't make a lot of sense. We'll talk about that in a second. And the composite benchmark price in Toronto is about $1.1 million. But for the first time, I believe, since 2017, year over year, that is down about 1%, and it is down about 20% from the peak we saw in March. Let's jump right into talking about prices. Last month, I talked about how in Toronto, they've seen 6 months in a row of price declines, with the last 3 months seeing that pace of price decline slow down. Now we're at 7 months in a row of price declines and 4 months in a row of seeing that pace slow down. In fact, this last month, month to month, was the smallest price decline we've seen all year long. And for 4 months in a row now, the average price in Toronto has actually increased. Now it's only about 1%. So basically we're seeing prices kind of flatten off right now in Toronto. And this is something I talked about in the intro. I'll be talking about at the end of this video, and I see it a lot in the comments section, that it takes many, many months for interest rate hikes to impact the real estate market, especially in a market like Toronto, which is very interest rate dependent. So it's going to take many more months, and we should expect prices to continue to decline. I'm not saying prices won't continue to decline, but we're very clearly seeing the pace of price decreases in Toronto slow down. If we were expecting that these interest rate hikes would take many, many months to kick in, we would probably expect to see the pace of price declines in Toronto increasing. We're not seeing that. And in fact, in 𝗳𝗲𝗃𝗀𝗄's most recent speech to the Canadian Senate, he specifically said that they are seeing the impact of those higher interest rates in the big ticket items like housing already. They're just not seeing it in the broader economy yet. And this is just a little hunch I've got, and that is we saw the biggest price declines month over month in Toronto the same months we saw the biggest rate increases. Again, could be entirely coincidence, but it's just an interesting little hunch I've got, and we'll have to see if this plays out to be true or not. The market pace in Toronto, well, this should be no surprise. It's a whole lot slower in Toronto than it typically is this time of year. In the nation's capital, Ottawa saw just under 1,000 homes sold in the month. That's down 42% from the 5-year average of about 1,700 homes typically sold in the month. They also saw a little over 2,000 homes put up for sale in the month. That is up 2% from their 5-year average. Typically as well, right around 2,000 homes will be put up for sale this time of year. And the active inventory continues to get better in Ottawa. 3,200 homes for sale right now, up 19% from the 5-year average. Only about 2,700 homes are for sale this time of year. And that leaves months of inventory at 3.3, basically just starting to edge into a balanced market. Boy, that's something we haven't talked about in Ottawa in a really long time. The composite benchmark price, $630,000, up 1% from last year, but it is down 14% from the peaks we saw earlier this spring. That basically puts us back to where we saw for prices late 2021. When I'm talking with agents in Ottawa, they're telling me a similar story that I'm hearing from a lot of different agents across the country, and that is their buyers are taking a very much wait and see approach. Let's see what's happening with interest rates. Maybe we'll see the peak sometime in the spring or back half of the year. Maybe we'll see rates increase, but everybody's taking a wait and see approach right now. They're also waiting to see what happens with prices. Kind of leads me back to the theory I've been saying for a while, and I think this applies not just Ottawa, but a lot of different cities in Canada. Once we see stability in interest rates, even if they just stop rising, I think you're going to see more buyers inclined to get back into the market. But right now, the market pace in Ottawa is slower than normal. In Montreal last month, almost 2,800 homes were sold. That is down 35% from their 5-year average, which typically you're going to see about 4,200 homes sold in the month. They also had about 5,400 homes put up for sale in the month. That's down 9% from the 5-year average, typically closer to 6,000 homes are put up for sale in the month. But there is 16,200 homes for sale right now, but that is still down 23% from their 5-year average. Typically about 17,800 homes would be for sale this time of year. Months of inventory at 5.9 means we're right on that edge between a balance and a buyer's market. Last month, we were actually just slightly into a buyer's market, but it's kind of sitting on the edge right now. And the benchmark price just slid under $500,000, making it equal to last year, down about 10% from the peaks we saw early in the spring. Now, when I'm talking with agents in Montreal, they're telling me that they did see an uptick in activity, whether it's number showings showings are doing, phone calls, everything else. So they're kind of seeing things start to get a little bit busier right now. They're also saying they saw an increase in the luxury market. And interestingly enough, foreign buyers looking to buy before the foreign buyer comes into effect next year are right now looking to purchase to get in before that happens. And the market pace in Montreal is slower than normal this time of year. In Halifax, there were just under 400 homes sold in a month. That's down 37% from last year. They have about 700 homes currently for sale right now. That is up. Again, I have to actually look at this, 120% from last year. Months of inventory, 1.8 tied with Calgary, is one of the tightest markets in Canada right now. The average price, $535,000. That's up 14% from last year. It is still down about 4% from what they saw a few months ago. It's also up from the month before. Okay, here is a really interesting stat for Halifax. 393 homes were sold last month, and that was the worst October they've ever had on record. And yet still 170 homes sold at asking price or more than asking price. So you have the worst month on record, and nearly 50% of the homes that sell for asking price or more. To me, that's absolutely crazy. The market pace in Halifax is about normal to slightly busier, but it does kind of feel like things might be picking up a little bit. Okay, so what was your answer to my question to start this video? Is the Canadian real estate market crashing, stabilizing, or rebounding? My answer is the Canadian real estate market is starting to show some early signs of stability. And here's why I think so. If you look at those very interest rate sensitive markets like Toronto and Vancouver, we saw 6-7 months in a row of prices declining, but the last 3 or 4 months, we've seen the pace of price decline slowing down. Make no mistake though that sales volume is well below the historical averages there. And I stole this from Steve 𝗬𝗂𝗬𝗂𝗬𝗂. I talked about it in the Vancouver update. We've seen in Vancouver the lowest number of sales since 2008 in the middle of the recession, but there's half the inventory. And that is also true in Toronto as well right now. There's simply not a lot of choices for buyers that do want to go out and look and buy houses, but it does appear that these buyers are starting to get used to the reality of higher interest rates. The other thing I talked about is how interest rates are having a much quicker impact on the Canadian real estate market than some people assumed that they would. The theory is that it takes many, many months for these interest rate impacts to be felt in the market. And the reason I don't think that is true is, well, it shows in the numbers. We saw an immediate impact with prices declining very quickly. And in the last 4 or 5 months, we've seen the pace of price declines start to slow down. If it was going to take many, many months for these interest rate impacts to be felt in the real estate market, well, then we should see the pace of price declines increasing, not decreasing. So why is that? I think there's a couple of reasons. One is that not only did interest rates increase substantially, they increased very quickly, and that had an immediate impact on buyers' ability to qualify for a mortgage or the prices they could qualify for. As well, there was a large number of people who had bought houses right at that peak and had to sell their existing house before they closed on that deal. So they had to get rid of that house, and if that meant taking less money, they had to do so. So there were some immediate impacts that happened very quickly. The other one is the pace of communication. I bet you a year or two ago, not very many of you were waiting on bated breath to see every 6 weeks what the Bank of Canada was doing with interest rates. And now here we are every 6 weeks talking about it. Same thing in the news. There's things all over the news talking about how bad the real estate market is and how much prices are declining. Yet 6 months ago, all we were talking about was bidding wars everywhere and what do we have to do to slow the pace of price appreciations down, and that prices are going through the roof. That's how fast the news cycle changes, and that has an impact on a lot of people. Often, market sentiment is far more impactful than market reality. Now it's time for my sales pitch. If all this information has not deterred you from thinking about buying a house in Canada and you don't already have a great real estate agent, I can handpick an awesome one for you from my network. In the description below is going to be a link to my calendar. You can book me in. I'm going to give you a call, learn about what's important to you in a real estate agent and in a home, and get that right agent set up for you. And if you love learning about real estate, right here is a recent weekly news recap I've done on the Canadian real estate market. Check those out. And please help me out. Like, subscribe if you haven't already. And as always, thanks very much for watching.